Happy Monday morning. It's another Monday Mortgage update with our good friend Nathan Jennison with the Mortgage Architects. Nathan, we've had a lot of really exciting things happen this week. First of all, the Iranian war. We were predicting it was going to really affect the rates. Give us a little bit of an update on what happened last week after we got that deal.
Yeah, well, it's fascinating because I think this is one of those stories where essentially we see how markets play out and sometimes in unexpected ways. So we got the Iran deal that we were hoping for and was going to drive rates down, and we were seeing the market respond and hope towards that. We were seeing rates move down from that. What's interesting is that was the driving fear that we were dealing with at that point. Then we had a Fed meeting, and in that Fed meeting with Kevin Warsh, which everybody was like, hey, this is a ray of success. Kevin Warsh held rates steady. He did exactly what the market expected. However, we saw a pretty significant reaction to the fact that 9 of the Fed members had basically are showing that they would expect to have at least one interest rate rise by the end of the year. Some of those are actually looking for multiple interest rate rises by the end of the year. And so the market then responded to that fear, and we actually saw interest rates rise, which we basically moved from one fear to another. And what's interesting about this is Kevin Warsh is trying to get away from the whole future prediction of the dot plots, et cetera. In fact, he refused to fill out his dot plot. And so because basically he's holding that essentially future predictions are often wrong, and he wants to really run the economy based upon what data is saying in more real time than based upon where they expect it to go.
I know he held steady, this initial meeting last Wednesday. He kept the rate stable, but was that like a reaction to him not wanting to come in and rock the boat, or was that more like, yeah, this is where he thinks rates should be?
That's a good question, and I don't fully have the answer to that. The reality is that he's in a really tough spot because on one hand, you've got inflation that is ticking up, and that generally would say, hey, we need to raise rates to deal with the inflation. But on the other hand, you also have a jobs market that on one hand is showing strong numbers, but those numbers are coming from segments that really don't show that the economy is actually doing all that well in terms of the jobs market. And that would mean, ultimately lowering rates. And so you're in a tough situation how to navigate that. What we see him shifting to is essentially wanting better data. And he's got, the 5 task forces out to do some research on some changes that he is proposing. And that also gives him a position in which he can basically hold for now and basically buy time waiting on those reports to come back to see what it is that he wants to do. So it's hard to know exactly, whether or not it's right or wrong. That said, he's got a tough call to make. He's in a tough spot.
Yeah, it seems like there's a lot of confusion, in the market, and insecurity and instability. Do you think that confusion is the number one emotion driving these decisions and how the market is reacting? Or do you think it's a different emotion?
That's a great question. And the interesting thing that behind it is a lot of psychology. I would say the number one emotion is really fear. Mm-hmm. And that tends to be like fear of loss is like one of the biggest things of why people make decisions in the market and how that plays out, across the board in terms of stock prices, et cetera. And we're seeing the same thing in terms of mortgage interest rates. What's also interesting is that Kevin Warsh's approach is also a double-edged sword, because on one hand, he's saying, hey, we're not going to do future predictions. We want to run things according to really what we're seeing in real time. But at the same time, that the future predictions is part of what stabilizes markets. It's part of what people then base decisions on, because they go, oh, this is what's going to happen. And so the fact that he's not giving that, and we're hearing from other Fed members of what they think they should do, is causing some uncertainty and some fear. So, it's hard to play that out exactly, just because you have a lot of unpredictability in the midst of world events and people's emotions to those.
Yeah, a lot of unpredictability. I think that's the understatement of the day for us. Thank you, Nathan, for giving us an insight into what's going on in the market this week. I love these updates with you because you're so smart and I don't have to do all the research because I just check in with you and what's going on this week. So thank you so much for joining us. And I hope everybody will come back next Monday. We have learned so much from you and thank you very much. We'll see you next week on the Monday Mortgage Update.
Always a pleasure, Kendra. Thanks for having me.